What's up, you guys? This is Olisa right here. I'm super happy to bring you this new video. So this is a class where you learn about psychological levels. As you can see on the chart, you can see all these black horizontal lines that you can actually get from here, or you can get it from here. Just click on the tools here and you can find it here, horizontal line. So let me make this big so that you can understand what I'm saying. So these are all psychological level. This over here, let me show you. This line here, this line here, this line here, this line here. All these black lines you see in here are all psychological levels. So what is psychological levels in the forex market, in the forex chart? So psychological levels simply means those areas of interest where the big players in the market always look out for. They are places of supply and demand, and they often act as support and resistance levels. So this horizontal line you see over here are all 50 pips different. Let me show you what I mean. They are 50 pips different. Let's measure it. As you can see here, it's 50 pips different. 50 pips different. So if you measure also from here, from here to down here also, we discover it's equally 50 pips, and equally going up also is the same stuff. You just have to drag it to the other side and you see it's 50 pips up here. So what the psychological level simply means is that it gives you area of interest. So it prevents you from the urge of taking trade, let me enter. It gives you an edge over the forex market. Oh, let's look at this uptrend. In the 4-hour time frame on GBP USD. We are seeing a series of higher highs and higher lows. For example, you can see that over here. Let me bring this up. You can see that it's a clear, perfect uptrend. And we're about to see a change of character over here. So what's happening on this market? If you look out very well, you see that the psychological levels is always respected. It is often very respected. Look at this psychological level, very important. 1.30000. So for example, now if you want to go buy something in the market, for example, you want to go and buy gala in the market, and I tell you that the gala is 2,000 naira or $2, and you need to price it. You can't start like pricing. Can you sell me this gala for 1,769 naira or dollar? You get, you price it in such a way that makes sense. Maybe you can price, can you sell me this 1,500? Can you sell me this 1,617? So you wouldn't be pricing it at prices that doesn't make sense, that are off the chart. So why this is often respected is because of the value. Like, it makes sense, it's a whole number. You see, when the price often touches it, there is often a rejection, there's a rejection, it happens often, very often. Rejection. Maybe we could see a rejection. We must see a rejection up here. We must see a bounce back before it continues to the downtrend, if this is really a break of character, which it is in smart money concept. You can see that over here. So why it's often respected is because the big players in the market doesn't just come into the market and say, oh wow, the market is trending down, let's just hop in. This is purely buy and selling stuff. Forex market is purely buying and selling, so they can't just like come up and place a trade because they see that the price is trending or doing stuff like that. They wait for the psychological levels to hit, before they can take pure actions. So let me give you guys another tip. If you go to 1 hour time frame, let me break it down more. If you go to 1 hour time frame, let me show you um where it performs well. So for example, if you go to 1 hour time frame, you start seeing a rejection pattern whenever price reaches at that point. You see, you can see here that rejection pattern, all those weeks it left. This is a great opportunity for us to enter the market, and we can equally see that over here. We can equally see that over here. We can see that here. When you zoom in 15 minutes time frame, you can see that very well. There's always a rejection here, and whenever there's rejection, that's an opportunity for you to take advantage in the market. So that is the main reason why it's often respected. That is why it's called psychological level. Psychology, that is a mindset stuff. That's a mindset stuff. People doesn't just come into the market, just place a trade. So whenever you want to place your trade, often make sure that this psychological level is driven. Why it's 50-50 pips is because 50 makes more sense and it gives more gap. But if you're a scalper, maybe you can do 10 difference. For example, you can place your measurement tool here. That's the measurement tool over here. This stuff, let me show you. This stuff over here, that's the measurement tool. Just click on it, then come and place it and drag. But if you don't have the time, just click on the shift button, shift, hold it, and click left click, and you get your stuff. So if you're a scalper, this is what you have to do. Measure from here, measure 10 pips. That's 10 pips over here. That's 10 pips. Then bring your stuff, place it, make sure it's 10 pips. Maybe you can correct this later. Then go to your smaller time frame and see the rejections there. Then you can scalp the market. Don't scalp blindly. For example, let me show you what's happened here. You can see that 10 pips difference in 5 minutes time frame. You see that rejection over here. Look at that rejection here before price give us a clean trend to the upside. A very clean trend. And whenever a psychological level is often broken, a main psychological level, it's often retested before it continues to the direction it's going to. Let me show you what happens here. The trend broke this psychological level and still came up to retest it before it went to the downside. Equally, what happened here, it broke it, retested, and went to the downside. So that is a simple concept on how to trade the psychological level. This is GBP USD. It also implies on other pairs. Hope you understood. So that is simply it about psychological level. It really helps. Make sure you have it on your chart always, especially during the London and New York sessions, because it's often respected those points. After a breakout, liquidity grabbing, so market tends to touch psychological level before it rallies up to the direction it wishes. So always add the psychological level. So let me add one more to show you guys how it works. Let me check here. Okay, let's add another one and differentiate it. So this is 1.3000, and we want to add the psychological level. Just click on this, bring it down 500. So before that, you have to measure 50 pips. Shift click and measure 50 pips. This is 50 pips, and it has to be on 1.29500. So double click on it, change the value over here, clean it, add 00, and then good, we are good. So let's differentiate the color so that we know. So let's make it red. So let's see how it's being respected at the other side. Let's make this faster. So this is the red line we just drew now. So let's look for a cleaner pattern where it respected it. You can see that here. You can see that right here. So psychological level is often respected during trending markets. It's often respected very well during the trending markets when it comes to retest um, a trending market. So that's it, guys, for this video. Remember to subscribe to the channel and stay safe. Make sure you trade wisely, trade smart, and subscribe.